Hello, everyone, and welcome to the Lytham Partners Spring Investor Conference. My name is Ben Shamsian, Vice President. Thank you for joining us here today on our panel titled Revolutionizing Healthy Nutrition, Latest Innovations for a Nourishing Future. We are joined by executives from three great companies from the industry to get some insights on how they see the space. I've gathered some topics that are of interest to investors and hope to learn from our panelists. Joining us today are Hamutal Yitzhak, co-founder and CEO of Health Nutrition. That's BABY on the Toronto Stock Exchange and BABYF on the OTC. Juliana Stamberger, co-founder and CEO of the Planting Hope Company, MYLK on the Toronto Venture and MYLKF on the OTC. And Mike Morris, CEO of Perfect Keto, currently a private company. Before we begin with the discussion, I would like to have each of you introduce yourselves and provide about a 5-minute brief description on your companies. Hamutal, I will begin with you.
Yeah. Hi, everyone. I'm Hamutal, the CEO and co-founder of Health Nutrition. I'm a mom of 4. I have a background I'm a veteran of the industry. I led the infant formula operation of Abbott Similac in Israel. And before that, and after that, held several executive positions in marketing of global brands in the healthcare industry in the Israeli local market. And after that, I had established a company that produced and developed vegan snacks here in Israel. And at that time, we started developing Else. Else has developed the world's first whole plant dairy and soy-free baby formula. Else meets the global regulatory nutritional composition standards for infants and is modeled after the human milk nutritional composition and benefits, like any other standard dairy formula does. Today, the only 2 options for infant formula globally are dairy and soy proteins. We have a unique and exclusive IP-protected alternative to this $80 billion market. Our formula is a unique patented blend of almonds, buckwheat, and tapioca, and some other vitamins and minerals. It is produced from clean, minimally processed whole food ingredients in a proprietary all-natural process, as opposed to the rest of our industry who uses highly processed ingredients. We have built and continue building a portfolio of products for infants, toddlers, and kids, and also adults based on this novel nutrition formula. Today, we have solid evidence that Else Novel Whole Food formula is well tolerated with a high acceptance level. The product has been shown to improve gastric symptoms and support weight gain in children that had all kinds of gastrointestinal symptoms and poor weight gain prior to switching to Else.
All right, thank you. Julia?
So my name is Julia Stamberger. I'm the co-founder and CEO of the Planting Hope Company, and I also have 4 children. The youngest, 8 months, is not quite on formula yet, but Hamutal, very interested in what you're producing and the work that you're doing. Absolutely. So the Planting Hope Company, sorry.
Happy to provide it.
Oh, wonderful, wonderful. Thank you. Among other things, I'm also on the board of directors of the Plant-Based Food Association. And, my founding partners and I saw the movement around plant-based foods that was coming from the consumer demand about 7 years ago. And what we saw was immense growth, particularly in large categories like plant-based milk, which, along the lines of what Hamutal's developing, was driven by allergies and intolerances to other primary sources of milk as nutrition, such as dairy, milk, and soy. People were looking for alternatives, and yet what they were finding with a lot of what was available commercially were things that were poor nutritionally or poor from a sustainability standpoint. So what we found was that the biggest categories in plant-based food, plant-based milk, The rice and grains category in terms of nutrition delivery, plant-based snacking, were underrepresented in terms of products that really delivered on the reasons that consumers were making the switch. Consumers were leaving animal-based proteins and alternatives to go to things that were either better for the earth or better for them from a health and wellness standpoint. And everything from more health and vitality and nutrition to things like allergy and intolerance avoidance. Problem was in these super large categories. When I say super large, just the almond milk subsegment of plant milk alone is bigger than all of plant-based meat combined, right? Enormous categories. The products that were readily available didn't deliver the same sort of nutrition that people were leaving behind in animal protein. And so you were going from something like dairy milk, which, I've always been told drinking milk is good for you. Well, it delivers 8 grams of complete protein per serving with all 9 essential amino acids. And that's what animal proteins provide to the human body, is the essential amino acids that are the building blocks that your body needs but can't produce on its own. They were leaving that and going to things like almond milk, which are often less than a gram of protein and not complete protein per serving. Commercialized almond milk is effectively flavored water and arguably, not great for the earth in terms of how almond monocultures need to be sustained and grown from a water and a commercial bee standpoint. So we said, okay, what if we could develop products that are nutritionally equivalent to animal-based proteins in terms of what they deliver to the human body, but also enormously sustainable, and do that in large global categories where there's an opportunity to make a big change in terms of sustainability, regenerative agriculture, and the things that we need to sustain long-term growth and health of crops, as well as really deliver on human nutrition in a way that tastes good. Because that's the other thing that we saw that was interesting when you looked at the plant-based food market. The change is being driven by flexitarians, people who are eating some animal proteins, but they're opting for other plant-based proteins. And they're doing that where it's a better choice from a health and wellness standpoint, where the value is there, or frankly, where it tastes better. So that's where we saw the big category drivers. We launched the company again in 2016. We spent a lot of years doing R&D and development to create category disruptive products. And since we went public on the TSXV in the fall of 2021, we have launched category disruptive products that are the next big thing in categories like plant-based milk, where it will be north of 100 billion in terms of a category size by the end of the decade, growing by double digits. And our sesame milk that we introduced is the first true new subcategory to hit the market since oat milk. So we have brands that play in major categories across the largest areas of plant-based foods globally, and we are quickly accelerating. We just announced our revenue for 2022 was 4 times what it was in 2021, and we're continuing a rapid scale and growth as we put forward this chain and everything from, we're in about 15,000 grocery doors right now, 70,000 points of distribution, and scaling now. Our next focus is on food service, quick service restaurants and other points of distribution where we can again create this large scale change in the food system.
All right, thank you. Mike?
So you didn't tell me, Ben, that you had to have 4 kids to be on this panel.
You do, Mike.
But fortunately, I do as well.
Yes.
Mine are older. They range from 28 to 16. But I find that interesting that you found 3 people with 4 kids. So anyway, so I'm Mike Morris. I'm the CEO of Perfect Keto. I actually started out my career as an engineer. So I have an engineering degree and was an engineer for a few years until I sort of recovered and went into product management and consulting, and then kind of came up through high volume customer acquisition, mostly on the SaaS and online side. So Perfect Keto Group is actually a combination of a few different brands, one of which I've co-founded with 2 business partners back in 2018. And we're really all about low carb, reducing sugar intake, and supporting people that are on a keto diet. So, when you look at our customer base, they're predominantly people that are interested in, either weight management or chronic disease management, where added sugars don't help them in that process. And by reducing those, they're able to, oftentimes manage those conditions and manage those situations pretty naturally. So we sell online, as well as through about 3,000, 3,500 doors nationally. But we kind of came up from the online, so that's sort of where we focus and where we tend to see the most growth. That's about
All right. Thank you for that. Now let's get into some topics of interest. Healthy nutrition means different things to different people and organizations. How do you view healthy nutrition, and how have you implemented that into your products? Mike, I'll continue with you.
Sure. So we believe that healthy nutrition comes from eating real foods and avoiding additives, fillers, including added sugar. So we produce a line of food and supplements that help people lower their total sugar intake while consuming real foods. Particularly in the keto space, you'll find brands and products that aren't as focused on using real foods as we are. We take our ingredient standards very seriously, and there are a lot of things that we will not use in products because they're not real foods. So we also sell, like I said, we sell through online as well as through a number of stores nationally. And we develop a lot of educational content to help people really understand how they can achieve better health through foods that they consume.
Hamutal, you want to help us?
Yeah, sure. So to me, healthy nutrition, just like Mike said, is based on what nature intended, meaning real foods. And this is part of our major, I would say, core pillars in terms of what we developed. And this has always been my compass. The essentials, in my view, are consumption of complete and balanced, diversified diets of plants in their whole and minimally processed form as the major source of nutrition. Also making sure they are, if you are working with CPGs and you have to create a powder out of something, better have it as a whole food in terms of the ingredients, not break them down to their nutrient level. Also make sure that they're clean. Ingredients are clean and safe from contaminants, heavy metals, and pesticides, which we are doing as part of our core, one of our pillars. And being the most nutritious, sustaining long-term health and metabolic disease prevention, which is the contrary to consumption of ultra-processed ingredients, which is part of our industry. So this is the most appropriate thing for nutrition for humans. And at Else Nutrition, which feeds the most vulnerable creatures amongst us, it is even at the higher importance, and we weave this essential into each and every part of the Else Nutrition portfolio.
Julia?
So one of the things we've really focused on at the Planting Hope Company is driving the definition of sustainability as it comes to how do we feed the world with quality food over the next, 10, 20, 50, et cetera, years. And that is with foods that also are dense in nutrition, but also can respond to changing climates. With sesame milk, for instance, what we did there is we found a seed which is an amazing cover crop, and it's well known worldwide. Sesame, right? It's on the top of hamburger buns, it's in sesame oil, it's everywhere. However, the best and most nutritious part of the sesame seed has never been used effectively for human nutrition. What happens with sesame, it doesn't even have an industry association, if you can believe it, is we farmed it for over 4,000 years as a rotation crop for regenerative agriculture that can be switched off with heavy feeders like cotton. And it fixes nutrients back into the soil and renews that soil and prepares it for the cultivation of other cash crops. Well, the amazing thing about sesame, not only is it naturally pest resistant, does it not require pollinators, and it thrives with very little water, it's also extraordinarily nutrient dense. So what we were able to do, long story short, is to take that sesame after the oil was extracted and sold as a commodity, and take that pulp that was remaining that is hyper nutritious, use that as the basis of what's now the most nutritious and most sustainable plant-based milk on the planet. For us, being able to create a plant milk that mirrored what you were getting from an animal protein standpoint and didn't it force a trade-off there between what was functional and effective was critically important. Additionally, critically important along the line of what Mike's doing is to be able to do so and have an effective product that was both unsweetened with zero sugar added, as well as a sugar added option. Because what we're seeing from a dietary perspective is to really be functional and make an impact on nutrition, covering the entire spectrum, which is something, by the way, that dairy has never been able to do. There's always sugar, lactose in dairy, provided us the most effective way to deliver the largest amount of nutrition to the largest amount of people. And so we look at nutrition as a really core building block for development and delivery of any food, because that is, at the end of the day, how we really get to a sustainable environment from a crop cultivation standpoint.
Okay. The category as a whole is growing fast. What geographies are you currently focused on, and what are your expansion plans over the next 2 to 3 years? Hamutal, I'll begin with you.
Okay, so we started our international expansion after starting in the U.S. market, being there about 2 years. We started our international expansion in the middle of 22 with the Canadian market. It was kind of an obvious thing to do because many customers already were aware of us from the Canadian market and were purchasing our products online. So to our surprise, it was an enormously fast and wide acceptance there. Although we had this small customer base already there. All the major grocery and pharmacy retailers like Loblaw, Sobeys, London Drug, and many others yet to be announced actually accepted us quite immediately. Next, we launched in China, late 22. We onboarded China's 2 largest e-commerce platforms, JD and Tmall, and we started building brand awareness. This is more of a longer shot with a huge market opportunity. We assume this will take resources and efforts to build that awareness and brand recognition in such a sensitive space. But we know in the longer run, it will pay off very significantly, as China is the largest market by far in baby nutrition, and providing such a unique market proposition in a market with the highest level of milk intolerance in the world will surely pay off. In 23, we're planning to enter Western Europe in the second half of the year. The initial launch will be in the UK via Amazon and local distributors, which we're already engaged with, and with other countries to follow. The population in Western Europe is roughly 300 million, similar to the size of the US. However, research has shown that Europeans are even more conscious of healthy eating habits. In the UK, we're seeing increasing demand from parents for infant and children plant-based nutrition, as many children are exhibiting increasing sensitivities and intolerances to existing formulas. So UK's consumption of vegan food and drinks is the highest in Europe, and flexitarians are said to make up half of all UK consumers by 2025. Furthermore, there is an increasing prevalence of dairy, soy, and pea protein allergies, with 1 in 40 children in the UK reported an incidence of cow's milk allergy or cow milk intolerance. In the second half of 23, we're also planning to launch in Australia for local sales, as well as another gateway to China, with a very unique and new product line that is only applicable for Australia at this point in time, from 6 months up. It's a kind of an infant formula that we're going to launch there.
Thank you. Julia?
So we're digging in hard to our home market of the U.S. as well as to Canada. Canada is our adoptive home since we went public there. And we launched Canadian compliant bilingual packaging for the Canadian market across our top SKUs in 3 of our product lines: Hope and Sesame milk, our Bright Rice veggie rice, and our Mosaics veggie chips in Q4 of last year. So we're scaling deeply in the US and Canada first, but we are also getting extraordinary interest from the rest of the planet, which, to Hamutal's point, is even more developed when it comes for demand and desire for both plant-based milks and other things that deal with allergies and intolerances. But also products like our veggie rice are pretty unique. We use 10% rice flour in our rice. 90% veggies and lentils. And what that means is that we're able to provide something that swaps 1-for-1 with a grain of rice in someone's diet, but provides 11 grams of complete protein, which is 4 times the amount of protein that you get in white rice, plus 6 grams of dietary fiber, and has a low glycemic index. That means that in countries like in South America and Latin America, where there's a growing issue around type 2 diabetes and other glucose intolerances, that we're able to provide something that swaps 1-for-1 with an important part of the diet and supports that ongoing growth in better food as medicine. So we're seeing huge interest from not only Asia on the sesame milk side, Latin and South America on the rice side, but also the Europe, and frankly, anywhere where there is an interest in, non-dairy milk and an understanding of sesame, which is most of the globe. We're going to be very strategic in terms of how we tackle these various markets and ensure that we are well capitalized for that production, and we go in with a smart strategy. We've seen other companies that have entered markets outside of their home market stumble, and at the end of the day, cause issues that were hard to backtrack from. So rest assured that when we go into a new market, we'll do so very conscientiously and capitalized with the right partners to be able to be successful.
Thanks, Mike.
Sure. So as Julie mentioned, we too are focused in the U.S. We're primarily e-commerce. However, most of our focus to date has been in the U.S. We have some partnerships where we sell in Europe through a distributor that handles the European specific issues that you need to do from food and supplements. But our path of growth is really more about products and more about acquisitions, looking at other e-commerce brands, that are comparable or a bit smaller, and purchasing and integrating them in. Again, when they align with us from a nutritional perspective and a cultural perspective, and a product perspective, we most recently launched really the first keto certified macaroni and cheese based on lupini beans. So very low net carbs. And there's some, and it tastes pretty close to real mac and cheese. So it's a really good product, and those kinds of things are things that allow us to, not only expand our reach, but also, help us upsell and sell additional products to our, over 1 million subscribers that we have online.
All right. Thanks. Let's talk about retailers. I know for most of you started it online, but at some point we got to get to retail boxes. What are some more notable retailers that you're currently selling in? And what are the challenges in trying to get into doors and expand your presence? Julia, I'll begin with you.
So we have a presence with some of our products across most of the major North American retailer names, everything from Whole Foods, Publix, Kroger's, Loblaws, CVS, et cetera. Not all of our products are on all stores and locations. And the way that retailers typically segment is very few things go chain wide. Even retailers with a few hundred doors will often segment the distribution based on planograms and available space. With grocery retail, you're going through a process of a category review and placement, which makes things more process driven. But it also, I think investors sometimes think, okay, well, you got into, you launched a new product first of all, why aren't you in every grocery store? The answer is it takes a couple of years to work through those category reviews and to get there. And then, okay, you're in a store. Why aren't you producing millions of dollars just based on that new store chain alone? The reality of grocery is as follows. Number one, to get a slot, effectively what you're doing is you're moving somebody else off the shelf. And so the retailer charges you move-in expenses, and those move-in expenses are typically one case of free fill product into the shelf, and that pays for your move-in. Now that you've paid that move-in, you're there forever. It's like renting an apartment, right? You paid for the moving trucks, the initial setup, for the deposits on your utilities, whatever it might be. You stay there for the next 30 years, you don't pay those again. Retail's the same way, but it takes 6 to 18 months to amortize off those costs, because a grocery store has 40,000 items in it typically, and those items are set up to service households in a couple of mile area around it, so a couple thousand households. In other words, if you sell 2 units per store per day in 2 units per store per week in a lot of categories, you're successful. You're hitting that bar. That's what things like peanut butter that have been there forever do. So it takes a lot of retailers and time to be able to scale that. Once you're in a retailer, then you want to focus on velocity. You drive awareness, you run a sale, you run a promotion, and then you should sell more, and then you should be at a higher level after that. But it takes time, and it takes effort, and it takes more than you would think to get there. So what we do is we take the retail strategy, and last year, again, we laid 15,000 grocery doors, but then we also lever food service and other locations to drive the awareness outside of the store. When you're doing a promotion in the store, you're screaming for attention to get on somebody's shopping list who didn't necessarily come there to buy your product, and you're competing with 40,000 other products. So we focus on a strategy where once you have answered the question, where can I buy your product at a store near me? And Ben, to your point, e-commerce isn't a satisfactory solution to a lot of consumers. You can say I'm available on Amazon, and they're like, cool, but are you available at my local Whole Foods? So, for a lot of consumers, that provides a challenge that you have to get behind. Now that we've made that investment, going into places like food service and alternate locations, all of our 3 of our products actually are repeat customers or showcasers on QVC, where we're selling to a home shopping audience, but at the same time, every time we're on, it's a 8-minute infomercial effectively from a trusted source for products you can buy in the grocery store. All of these tactics provide higher volume that then feed the grocery doors, and things like food service, they create awareness, right? You go into your local cafe, barista says, try sesame milk, you order a sesame milk latte. Then when you go into a store, you're familiar with sesame milk, you've already tried it. So, and those locations, we have a cafe in Soho that just called us the other day, and they said, we just want you to know, we put you on the menu a couple months ago, we did no marketing. We're now doing 60 liters a week. So if you can combine the depth of food service and other things, and that applies to all of our products in a certain way, right? With Hamutal, it may be hospitality, or maybe healthcare. Yeah, hospitals,
healthcare,
exactly.
welfare, all kinds of things that,
That's
insurance.
Yeah, insurance coverage and the rest, that's where it really starts to crank, right? If you can be the baby
Correct.
formulates in hospitals at delivery, for us, it's, if we can be the barista milk of choice, at a cafe when you walk in, all of this creates the awareness that then drives the retail sales. So, and it also creates the more profitable revenue. Grocery is extraordinarily expensive, and not for all the reasons that I've just described. In addition to that, there are net chargebacks, deductions, all sorts of things that come through distributors you wouldn't think of. Your net margin points get whittled down. So combining that with a food service approach or alt market approach is what ends up creating long-term profitability.
All right, Hamutal.
Yeah, I think Julia took my words, most of it, but I'll just describe what happened with us. I totally agree with it, whatever Julia said with regards to the velocity, with regards to everything that happens within those stores, and the length of the process. It's a long process thing, and it's not always understood, and to many of our investors. So we expanded our North American retail presence 10 times in 1 year, in the recent year, from 1,200 stores in the beginning of 22 to nearly 12,000 stores listed today, including the recent US launch in 1,000 Walmarts and 7,000 CVS's stores, and as well as Canada's largest grocery and drug retailers. we expect 23 to be another year of strong retail expansion and anticipate our store base to increase to 20,000 and our points of distribution, meaning our SKUs multiplied by the number of stores presence, to go over 50,000. Our retailer sales velocity is growing fast. That's the most important thing, as are their reorders. As a result, many of the retailers are expanding the shelf space and SKU range for health nutrition, and most of them will be selling several health products. Most of them already do. Two great examples are CVS, which added our cereal range, and they started with a toddler, and now they added another range of products, and Walmart, which added 3 SKUs, or 3 ranges actually, 3 Else Toddler Omega, and all the cereal range. As a result, the challenges we have recently faced were quite robust. We had to ramp up at all levels, including cash burn for working capital and new supporting equipment, raw ingredient supply chain, which is very difficult in the recent year and a half. We had to build sufficient levels of inventory to avoid out of stock, and we did have out of stock issues. We needed to secure flawless raw material and packaging supply chain with new vendors that need to be vetted and qualified, and that takes time, and meet our rigorous quality assurance standards, which are the highest in the food sector because we are dealing with infants. We had to dramatically increase our manufacturing capacity with new and familiar sites, which we had to locate and negotiate better pricing. These are all long-term processes that are not guaranteed to be successful at all times.
Thank you. So you guys mentioned manufacturing. I want to talk about that next. Obviously, the consumer products company, it's a big deal. What are some of the challenges you're seeing there with regards to manufacturing, and how have you been able to manage them? Mike, I'll begin with you.
Sure. So we manufacture our products through co-mans. And so there's a logistics and a supply chain aspect of that, which has been challenging, certainly over the last couple of years. I've been astounded by the number of things that just you can't get, the number of the different things that are short because of sort of COVID hangovers are amazing. But, really our focus from a manufacturing perspective is, we keep the number of co-mans relatively limited so that we have deep relationships with the ones that we work with. And, we're large enough with them so that line time is a little bit less of a challenge than it might be otherwise. And that helps us, really deliver things relatively on time, I will call it. One of the interesting things that we've gotten really good at because of the events of the last couple of years is pivoting and shifting product launches or restocks or other things like that based on what we can get or when we can get products delivered. We've also started a process of free selling. I actually thought of this one day as I was flipping through the channels and realized that you can pre-order movies on demand, which I think is a really bizarre thing to do. And I thought, well, geez, if you can do that for something that bizarre, why couldn't you pre-order macaroni and cheese? And so we did that when we launched that product. And what that allowed us to do is not only build a lot of excitement before the product was available, but it allowed us to completely disconnect the launch and all the marketing activities with the delivery of it, which was fantastic because the delivery kept moving. And so, that turned out to be quite successful and was one of the best launches we've had because we not only did we have the ability to do it regardless of supply chain realities, but we were also able to kind of get a 2-for on it because we were able to promote it before it came in on a pre-sale and then when it actually showed up. So again, we've taken the challenges of the last couple of years from a manufacturing perspective and really tried to turn them into lessons to improve our overall operations.
Okay, thank you. Hamutal, you've had your share of challenges the last year or so. Help us out here.
Yeah, so in our case, it started with a mechanical issue in our major manufacturing site, and that took a long time to recover from. And then Right after that, we had this launch in Canada, which created a huge demand and out of stock issues. And we kind of got into a situation where we didn't have another capacity or an alternative capacity. We were in the middle of looking for or trying to locate additional capacity sources, but we were kind of we were caught in the middle of an incapability to provide the demand, which was growing all the time, especially in the shortage with the shortage in infant nutrition in the background, which also contributed to that. So we were out of stock with certain products for about 6 months, and it really created a big hole in our revenue. I think we lost about $3 million US in revenue in those 2 quarters or beyond that. But fortunately, we have overcome that, and it also created an opportunity because we actually secured additional manufacturing resources, which made us become way more efficient in terms of the cost of manufacture. So everything that happens is always for the best eventually. Yes, so we have now tripled our capacity due to that crisis that happened, and now we are set to go for the next 2-3 years with that manufacturing support to support our growth.
Thanks. Julia?
Yeah, to Hamutal's point, sometimes challenges can become opportunities. When the Ukraine was invaded, we, did a sigh of relief that we weren't pulling sunflower oil from the Ukraine. But then once the Ukraine supply dried up, everybody came after our supply of sunflower oil. So we had a shortage nonetheless. We looked at, re-engineering our core products that used it, specifically our sesame milk, to take out sunflower lecithin. And along the way, we found out that, chickpea aquafaba was now more plentiful and actually provided a better emulsification and other characteristics to our barista milk than we were achieving with the sunflower lecithin. So, that adaptation actually improved the product. A few years ago during COVID, we saw starting to happen from a supply chain issue, some of the issues that have led to inflation more recently and supply chain challenges. And some of those were specific to ingredients that were shorter in supply, like organics. We also saw that with the ramp up of grocery food demand during COVID, co-manufacturers were producing key elements of the supply chain, like, for instance, the pellets we use in our mosaics chips. We're moving out of organics and focusing in the more conventional non-GMO products. In other words, if there was an organic product that we could get made once a month, scheduling into the production cycle, now that's stretched to once every 4 months, and you cannot scale on that. Additionally, when we set off to develop sesame milk, we decided, as again, longtime entrepreneurs in the food industry, to develop for the highest standard, which was organic. We thought that by the time we came out with sesame milk, there could be 20 other players. Turns out, after 5 years of R&D, we were the only sesame milk commercially, and we still are, throughout the world. So with that, we also saw that the organic standard that we've been able to hit was causing issues with the sourcing of our pea protein, similar issues to what I described with the sunflower, only during COVID, but also was positioning our product at a premium that wouldn't enable us to be competitive if we were developing a full subcategory. Long story short, we took the opportunity during COVID to engineer out the organic piece of our supply chain and focus on non-GMO with incremental sustainability, such as taking our mosaics chips, and we took off the organic premium, yes, but we also added neoplastic sustainable packaging film that will degrade in any waste stream without special handling and release a harvestable biogas that can be collected by landfill facilities. So we took the opportunities to upgrade and streamline our supply chain before going out to scale with our IPO. And we are always being one step ahead when it comes to sourcing co-manufacturers and capacity. Like right now, we're looking 2 to 3 years out in terms of where we need to be and where we expect our growth to be, and lining up those partners, because it is competitive for co-manufacturing, supply chain and line time with co-manufacturers. But also, you get forced into a certain spec by the way that you develop your product. In other words, we can't just go out and use any aseptic, milk manufacturer to produce our product. We have the form factor of our Tetra Pak carton, who can run that equipment, who has the right allergen profile, who has the right GFSI certs. It's a complex path that narrows your potential partners and creates issues that you just need to be well ahead of if you are producing as we are through co-manufacturers.
All right.
We have I just want to add something. We have the same issues once you really want to upgrade your products and leave to certain, principles or core messages that you want to stick to. Like, for example, ours being clean label certified, we have to kind of, just ban or not ban, but simply reject a lot of raw ingredients or a lot of shipments that are not meeting our standards, because they simply don't, even with the same partners that we already qualified. So that really, I totally identify with Julia's words regarding those elements you want to stick to, and then it really constrains your ability to play with certain partners. It's a very small number of partnerships that you can do because of that.
Right. So we're getting towards the end of our time here. One last question. Can each of you tell me something that either your customer base or your investor base may not fully appreciate about either the company or your products? And Mike, I'll begin with you.
Sure, thank you. So while our products are designed for people on a keto diet, and in order to keep people in ketosis, one of the things I think people don't realize is they're also great if you're just looking to reduce your overall carb intake or cut your sugar intake a bit and just eat a more healthy diet. So they don't have to be used in an extreme case like when someone's on a keto diet.
Okay, Julia?
So two things there, Ben. First of all, the numbers that Hamutal quoted in terms of retail door development and the numbers that I quoted, those are big numbers. Those are extraordinary numbers. Putting those numbers together in the 12-month period that Hamutal did with us and what we did with the Planning Hope Company, that's really big and really fast. Companies typically grow through a couple hundred at a time. So I want to point out that that's a remarkable achievement and something that investors should pay attention to. That level of acceptance by retailers, that green lighting and putting their hand up to say this is the next wave of innovation in these categories. These are unicorn moments. This is not something that you see every brand going out there and be able to achieve. And I know brands that have struggled for years and achieve much smaller numbers. So that's something I want to red flag for investors, is that what's happening there with retail distribution with ELSE and with the Planning Hope Company, those are big things. The other thing that I think also we have in common with ELSE is this is category disruption at a global level. These are not small categories. These are enormous categories. This is the future of food, and the products that we're creating have the opportunity to make a full-on shift. For instance, look at oat milk. Really, 3 years ago, oat milk was just putting a toe in its water. When Oatly came to the US market 6 years ago, they were doing about $45 million in revenue. They closed last year with $720 million. Oat milk is now everywhere. But as recently as 2020, there were still major supply chain issues in that category before others caught up. Within a very short period of time, that entire category has changed globally. That is what we are doing with sesame milk. Within the next 5 years, you'll be able to find oat milk on menus, yes, but next to it will be sesame milk. This is evolving very quickly. We're at the forefront, both of our companies, of the evolution in terms of what's happening in how people are eating worldwide. And we are not leading that movement as much as responding to what folks are looking for and the demand that's out there and filling those needs.
Right, and Hamutal?
Yeah, well, I totally identify with Julie's words again. I think the one aspect that may not fully be appreciated by our investors base is that unlike most startups that compete with other startups on the same space with a slightly different technology, in the ales case, we are alone with no real competition in our plant-based infant nutrition space. All baby formulas, with no exception, are exclusively made from either milk and soy proteins, as I already mentioned. And we are the third formula option. I'm not aware of a company that brings a solution protected by an international patent portfolio that has no alternative competitor in the entire world. Once we obtain the FDA approval for an infant product, we will have a complete product portfolio that truly changes the global infant nutrition forever. And that's exactly what Julia said. We are trailblazing and we are creating the future of food here. And that's the most important part of the uniqueness.
All right. Well, thank you, everyone. Unfortunately, this is all the time we have. I want to thank all our panelists as well as everyone listening. If any investors would like to get in touch with any of our panel companies, please reach out to myself or any member of the Lytham Partners team. And thank you and have a good rest of the day.